All right, everyone. It is noon straight up on November 2nd. We'll go ahead and get started. Good afternoon and welcome to the latest installment of Michigan First Virtual Series on Credit Awareness. My name is Jeff Fitzrick, Chief Lending Officer for the Credit Union, and we're excited to have all of you on for this important event. For those of you that have been members of ours for a while, my hope is that you've had the opportunity to attend one of our in-person credit awareness seminars that we typically hold a couple of times each year here at our Lathrop Village office in the Mint. In those events, though, we spend 2 to 3 hours taking a deep dive into what makes up a credit score and how to effectively manage your credit to ensure that when you need to borrow, you've got the best chance to get the best rate that you can. This specific installment of our quarterly webinar series on credit awareness and management will show you how to use your credit score as a valuable financial tool to achieve long-term borrowing success. As always, we're fortunate to have with us today the person that I consider to be the preeminent expert on credit in the industry. He's our senior underwriting manager, Mr. Brock Knoll. Brock has been with the team for about 15 years and has worked in the financial services industry for over 20, educating not only our team, but many of our members on how to best manage through credit and financial challenges to ensure that your cost of borrowing remains affordable long term. Before we get started, just a couple of items of note. The chat feature within the presentations platform will be your opportunity to present questions to us, as we won't be taking any real-time audible questions. We have everyone muted and videos disabled. So please direct messages in the chat feature to either Jamie Baker or myself, again, Jeff Fitzrick, with questions that you wish to have addressed, and we'll do so at the end of the presentation. We should last about 40 minutes today, and then we'll take the time to review and answer some of the questions that are proposed throughout the session, and we plan on ending no later than 1 o'clock. So without further ado, I'll hand the presentation over to Brock to begin. Thank you, Brock.
Thanks, Jeff, and welcome everybody. Want to just say thanks to start out with for taking a little time out of your day to spend with us. As several of you may know, Michigan First used to be Detroit Teachers Credit Union, and we pride ourselves in the education field. So really educating our members on all types of things that have to do with your finances really is special to us and something that we like to do. As far as our lending team here, we really like to educate our members on their credit. And today we're gonna really focus on why your credit is important to your wallets, because it does make dollars and cents to you to have a good credit score. As Jeff indicated, we typically get together 1 or 2 times a year and have a really big credit seminar where we all get in our conference center in the Mint and spend a lot of time, 2 to 3 hours, really digging into credit. These virtual seminars really allow us to pinpoint a few things and do a little quick hitter session. That way you don't have to spend too much time listening to us talk about this, even though it's very important. And in today's session, we're going to be talking about using your credit score as a financial asset. I think that we can all agree right now it is a difficult time with finances. If you go to the grocery store, you're spending more money for the same things that didn't cost as much a couple years ago. I don't know if any of you have been car shopping recently, but car prices have went through the roof. I know my lease is going to be up in February, and the same car that I'm leasing now is going to cost me $180 more than it did a few years ago. So right now, any dollars that you can save in any aspect of your life really matters. And I think everybody knows that credit scores are important, and everybody knows that those 3 little numbers mean something to you. But when you really look at how it affects you, when you really look at examples of how you can save yourself money by having a better credit score, it really hits home why it makes such a big difference. And that's what we're going to talk about today. So let's get into our session here. Why do credit scores matter? I've talked about it already. It really matters because it can cost you money out of your pocket if you don't have a good credit score. And one thing that I like to say, and one thing that all of our team members here at Michigan First teach our members, is that it's never too late to improve your credit score. As bad as you think your credit may be, if you find yourself in a situation where your credit score is lower, trust us when we say we've seen lower credit scores. There have been a couple of members I've helped, a couple of members I talked to when I used to work down in the branch, who, believe it or not, had credit scores in the high 300s or low 400s and thought it was over. They didn't think that was ever going to get any better. And now it took us a little bit of time to get them there, but those members currently, I still talk to them, are in the 600s, the upper 600s right now. And they can't believe all the progress that they've made. So it's never too late to improve your credit score, whether you need just to increase it a little bit, or if you really need to increase it a lot. You know, the journey for that is longer for some individuals and some of our members than others, but don't ever give up on this. It's never too far gone to turn this around and make it better for yourselves. So why do credit scores matter? Let's look at an example just right away so you can see dollars and cents wise why your credit score matters. Let's look at a loan scenario for two different people and see what a difference their credit score can make. So let's look at a car loan. Let's say you want to go out and buy a car for $25,000. I know that car loans are way more expensive than that. So if in your scenario here, if you want to apply this to your own life, this may even make more dollars and cents for you. But just for this example, for this purpose, let's look at a $25,000 loan. Two members come in and apply for the same car. Okay. One of them is an A+, has a 722 credit score, and the other member has a 542 credit score. That would be considered an E tier loan. So let's say they're going to finance this car for 60 months. That's 5 years. Okay, so the A+ member would get a rate somewhere around 3.24%. Okay, so getting the best rate that's out there if you're A+. Same member who has a 542 score is going to get a closer to 20% interest rate, 19.49. So what does that mean? Okay, what does that interest rate mean to you? Because a lot of us members say, okay, all those credit scores and all those interest rates, that's fine. What's most important is your payment, and that's what those interest rates dictate. So an A+ member is going to get a $451 payment on that $25,000 car. For the same exact car, if you have a lower credit score and you're in the E tier, your payment's going to be $655. Look at the difference in that payment. It's rather large, and that's just on a $25,000 loan. If you're talking $30,000, $40,000, $50,000, which a lot of cars are that expensive now, that number is just going to increase. Okay, so that's over $200 a month difference in the payment. So if you think to yourself, well, my credit score doesn't really matter that much, just think about what could you do with an extra $200 a month. I know that would go a long ways with me, and a lot of people are in the same boat. Okay, but where a lot of members don't realize you save money on loans is the interest that you pay over the life of the loan. Okay, so in this example, the person who is an A+ tier is going to end up paying $27,113 for this car. Okay, you don't get a car for free. That's why you go out and borrow money. You have to pay your interest, and that interest goes right to the financial institution that's giving you the loan. So this A+ member bought a $25,000 car and ended up paying $27,113.86 for that car. That's the extra money that they had to pay to take out that loan. Let's go over and look at the E tier member though. Okay, for the exact same car, they're going to pay $39,319 for that car. Look at that difference. Now we're talking tens of thousands of dollars that you save over the life of the loan. Okay, so let's look at those numbers just a little more in depth. The A+ member saved $203.43 per month over 5 years by having a better interest rate. But even more so, the A+ member paid over $12,000 less in interest for the car. Just let that sink in. If I told you over the next 5 years you can save $12,000, I think anybody would jump on board for that, right? That's why this is so crucial for everyone. That's why credit scores matter so much. $203 might not seem like that much savings if you just think about it real quickly. But think about saving $12,000. That's a lot of money. A lot of money. You could almost buy another car for that much money over the next 5 years, right? So credit scores matter. That's why when we educate our members and say, hey, you need to get your credit score as high as possible, get it into the A+ range or as close as you can. That's why we want our members to save money, especially in times like these where every dollar and every cent can be going towards something else. Okay. So let's move on. And we think, okay, that's nice, Brock, that you're telling us that we can save all this money, but maybe my credit score is not where it needs to be right now, and I don't know how to get it higher. Okay, that's why we're here for you. That's why we're here to help you. And I want to talk about a couple things this morning, or I'm sorry, this afternoon, little tips that we can offer you to increase your credit score. There's several things that you can do out there, but I want to hit on a few that are the easiest to do for you and can make the quickest impact for you. And I'm talking even next month, if you followed some of these tips, your credit score could be higher. And the biggest one of those, and the thing I want to spend the most time talking about today, is credit capacity. Now, several members that I've talked to don't have any clue what credit capacity is. They've never heard about it. And that's fine. Before I worked at a bank or a credit union, I didn't know what credit capacity was either. I thought before I worked in the financial field that the only thing that mattered with your credit score was how well you pay your bills. That's it. That's what I thought. And while that is the most important part, you do want to pay your bills on time, and that is the most impact on your credit score. The second biggest impact on your credit score, and almost affects it as much as how you pay, is credit capacity. So let's talk about what is credit capacity and what loans are out there that affect your credit capacity, okay? The only thing that affects your credit capacity on your credit report is your revolving debt, okay? So what is revolving debt? Revolving debt are those types of loans that you can use, pay them down, and reuse them again. That's why they're revolving, okay? They don't close unless you close them or the financial institution closes them. You can keep reusing them. So things like credit cards, right? You have a credit limit on your credit card. You can use that credit limit if you want to. You can pay it down, and then you can reuse it again. Same thing with personal lines of credit. You take it out, you pay it down, you reuse it again, and over and over and over again, hence the revolving. Those are the types of loans that affect your credit capacity. So what is credit capacity? Well, the technical term for credit capacity is the ratio of combined revolving credit balances to combined credit limits. Okay, that sounds like a bunch of mumbo jumbo to me. So what are we talking about in the real world? Okay. Your credit capacity is the percentage of your revolving credit that's available, but you're not using, right? So you have availability out there on your credit cards to use. How much of that are you using? That's your credit capacity. You want that number to be as low as possible. And the reason why it's so important to have your credit capacity be as low as possible, because each percentage point that you gain on your credit capacity can be about a percentage in your credit, or at one point in your credit score. Okay, so think about that. If you're maxed out on your credit cards all the way up to the top and you don't have any availability, you're really driving your credit score down. You don't have any availability, you're losing all those points off your credit score that you could be having. So if you paid all your credit cards off, just think, that would open up 100% of your revolving debt to use. You could increase your score by about 100 points. So if you're sitting there in the low to mid 600s, wow, all of a sudden you're up into the 700s now. And that can happen in a month's time. You could really boost your score quickly. So how do we calculate credit capacity? Let's look at a couple of examples so you can do this on your own. Okay. Let's say right now on your credit report, you have $10,000 worth of credit limits that you could go use on your credit cards, right? Let's say right now you are using some of that. You're using 4,000 of it, okay? So how to calculate your credit capacity is you take your credit limits, in this case, $10,000, and you subtract how much you're using. So in this example, $4,000. So you have $6,000 available, okay? So you take that availability and you divide it back by your credit limits to get 60%. Now, not everybody's math is going to be this easy. I wanted to make it easier for myself, first of all, and for everybody else to follow, okay? So credit capacity in this example is 60%. That's not too bad. You have 60% available to go out and use. So how do we gain credit capacity? Because I know for a lot of us out in the real world, we don't all have the ability to just pay off our credit cards every single month. If that was the case, we probably wouldn't have any credit card debt, right? We won't have to use our credit cards. So if you have $20, $30, $40,000 worth of credit card debt, not everybody can just go pay that off in one big sweep. But there are some other things that you can do to help your capacity, and we wanted to talk about that a little bit, okay? If you can't pay it all off, pay some of it off, right? There is a misnomer out there, and I don't know how this got out into the ether for credit, that you should keep balances on your credit cards. You should keep at least 30%. That's the number that members always tell me when they come talk to me about the credit. Well, so-and-so told me I should keep limits paid only down to 30% and keep 30% of my cards as balances. And I always say to members, that's not true. If you always keep 30% of your balances charged, you're missing out on about 30 points of your score. Okay. Now you should use your credit cards. You have to show the credit card companies that you are using your cards, because a lot of them will close your card if they think you're not using it for inactivity. And if your cards get closed, you're going to lose all of that capacity that you have. So if you had a $10,000 card and you haven't been using it, and they close it, you lose $10,000 of your availability, and that could lower your score, okay? But in any case, pay down your revolving debt as much as you can. Don't keep limits if you don't have to, and just do the best that you can, because the lower it goes, the more your score is going to increase. You can also raise your limits, right? So you could call your credit card companies, you can call your bank or your credit union and ask them to raise your credit limit. And that's an easy way, if they agree to it, to increase your credit capacity. So let's say you have a $10,000 credit card, and that's the only credit card and only revolving debt you have, and you're maxed out on that, right? Your capacity is going to be 0% because you don't have any available credit right now. But let's say you called that credit card company and say, hey, can I get an increase in my limit on this? And let's say they agreed to raise it to $20,000. Well, all of a sudden you went from being maxed out on the $10,000 card to only being halfway utilized on the $20,000 card. Your capacity all of a sudden goes to 50%, and you can raise your score about 50 points just by calling and see if you can increase your limit. That's how quickly this can impact your score. And that's why we're talking about this today. You could do a combination of those two. Call, get increases on your limits. It would be important not to use those increases if you can, right? And then pay down as much as you can. If you can do a combination of those two things, you're going to help increase your score. One thing that we've seen over the years is that some banks and some credit unions out there don't report your home equity lines of credit to the credit bureaus as mortgages. They report them as revolving debt instead. Those should not be reporting as revolving debt to the credit bureaus. Those should be reporting as mortgages. So if you get a copy of your credit report and you see that your home equity line of credit, or your HELOC, as a lot of us like to call in the industry, is reporting as revolving debt instead of a mortgage, you're going to want to call that company and ask them to report it the right way, because that can affect your credit score. Especially, a lot of us take out home equity lines of credit because we have to do work on our house, and we need to use that money. And that shouldn't affect your credit score in a negative way. Another thing that can be inaccurate is there are some credit card companies out there, I won't name them, but it's easy to find this out, that don't report your credit limit to the credit bureau, okay? So you may have a $10,000 credit limit with them and you're using $8,000, $9,000 of it, but they're not reporting what your credit limit is. So it looks like you're maxed out no matter what your credit limit is. That can affect your score in a negative way. So if you do have some companies out there that do that, and you call them and ask them to change that and they will not, maybe that's not a card that you want to use. Maybe you should come get our rewards card at Michigan First, because we do report your credit limits and we offer great rewards with that card as well. Okay. And that's another thing. If you don't have any revolving credit, go get some revolving credit, because it's going to help your score. It's going to diversify your credit portfolio. And if you use the credit card the right way, you can really drive your credit score up. So if you don't have one right now, if you're afraid of credit cards, come get ours. We'll tell you how to use it the right way, and we'll show you how to use it as an asset to help your credit score. Okay. So especially in times like we're in right now, you might find yourself in a little bit of trouble with your credit. You're trying to make ends meet. You know, groceries are more expensive. Everything you try to go buy is more expensive, and your dollar's not going as far as it used to. You might find yourself in some issues where you're having trouble paying your bills. So what do you do in tough times? What can you do in tough times to make sure that your credit score stays as high as possible? Couple things that you can do. Keep in close contact with your creditors, right? If you're finding yourself in trouble, the best thing to do is call and see what your options are. Say, hey, look, I'm having trouble making ends meet this month. What are my options as far as my payment goes with you? And see what those are. You never know what can happen. You know, we offer skip-a-pays here at Michigan First, where you might be able to get some assistance for a month just to make ends meet that month and bounce back next month. Call and see what your options are. If you make some arrangements, make sure you keep those arrangements, right? Make good on your word. Make good on your promises that you do what you say you're going to do. That'll keep you in good graces with your creditors and make the whole process easier if you find yourself in troubled times. You might want to consider some nonprofit credit counseling. If you do that, please make sure you go with a reputable company. There are a lot of companies out there who say they're offering you credit counseling, who don't do you any justice when it comes to your credit score. So make sure you're not being taken advantage of. The best thing to do would be to come in, talk to us about it. We have some referrals that we can give you for some credit counseling services that we know are reputable. Or if you have some questions on a company that wants to do business with you, come in and talk to us about it. We've seen this enough that we can give you some good advice. And that's what we're here to do. We're here to help you navigate troubled times if you're in them, and try to keep your credit score as high as possible. And most of all, see if moving your business to Michigan First can save you some money. You know, a lot of the members that I talk to don't know what their options are. A lot of us aren't experts in this field. So come in and talk to us. We are the experts in this, you know. I'm not good with cars. So if I have a mechanic issue, I need to go to a mechanic I trust that can tell me what to do with my car, because I have no idea. And some of the things that they talk about, after I talk to them, I'm like, oh yeah, that makes sense. Oh, why didn't I think of that earlier? Well, the reason I didn't think of that earlier is because I don't do that for a living and I'm not good at it, right? We do this for a living. We know what tips we can give you. We know what options are out there for you. So come in and talk to us. That's the best thing to do before you make any decisions. Come in, we can have a little session. We can counsel you on how to make yourself get in a better position with your finances in general, but especially if you're having trouble with your credit, come in and talk to us. Maybe we can do a debt consolidation loan for you. Maybe there's some other options that are out there for you, but at least we can point you in the right direction so you don't get too far gone where it's going to take longer to get yourself back on track. That should be your first option. Maybe we can help you with a loan. Maybe there's some other business we can do together to put you in a good position. That's what we pride ourselves on. Here's some things that you should try to avoid when you find yourself in times of trouble. Don't make arrangements that you can't keep. Be realistic with yourself. Be realistic with the companies that you're working with and let them know what you can and can't do. Don't spend more than you have, right? I know that sounds easy to say on paper and say out loud, and then you get out in the real world, and especially this time of year with the holidays coming up and you want to spend a little extra money on the ones you love, try not to spend more than you have. Make a plan, right? And then try to utilize that plan. And if you find yourself in trouble, like I said, come in and talk to us. Maybe we can do a skip-a-pay for you on your loans. Maybe we can offer you a loan to help you through the holidays and then see what next year holds for us, right? And don't try to borrow your way out of trouble. That is a very slippery slope. It's very hard to borrow money to get yourself out of trouble when you're already borrowing a lot of money from others. You can find yourself in a position where you can't get back from that, right? So when we talk about, and we're going to say this probably a lot today and in our other sessions that we hold, come talk to us. Have an open line of communication with Michigan First, and we can try to spot these issues beforehand and give you a good plan of action. That's the one thing that I love about working for Michigan First is when you come in and talk to us, it's not a one-time transaction. You're not just a number to us. When you come in and talk to us, it's all about, okay, here's what's going on now. Let's deal with that. And what can we do in the future? What steps can we take to make this better? And that's so fulfilling because it's like we're on the same team, right? Like you're family for us. We're really going to spend the time to let you know what you can do now, but let's talk in 4, 5, 6 months too, see what's going on then, and then let's take that next step to try to get you on the right path. And so if you find yourself trying to borrow your way out of trouble, it might be time to pump the brakes on that and come in and talk to us so we can make a good game plan for you. And don't get involved with credit repair companies. I talked a little bit about not getting involved with some of those companies that are out there that really try to take advantage of you. If you see a billboard, if you see a commercial about credit repair, you should go into that with your eyes open and really come talk to us first about it. There are some good ones out there, but there certainly are a lot more of them out there that are going to take your money, drive your credit into the ground, and really put you in a hole deeper than you thought you were and make things harder, okay? So be really, really careful when you see the term credit repair with the company that you want to do business with. So how can we reestablish credit? Let's say you missed a couple payments. Let's say maybe you weren't educated as much on credit and now you're feeling better about it and you need to find yourself repairing what's already been done. So what can we do there? Always maintain a good relationship with your financial institution. Like I said, we're the experts here. We know this in and out. We do this every single day. If you keep a good relationship with us, we're going to be there for you to help you if you find yourself needing to reestablish your credit. Clean up what you can. Like I said at the beginning of this call, some people's journeys to reestablishing their credit or repairing their credit is longer than others. Not all of us have the ability to go out and snap our fingers and make this better right now. It can take steps, right? So sometimes you got to take baby steps, clean up what you can, and then further that on and on and on until you can get yourself reestablished and get your credit repaired. But sometimes it starts with small baby steps and do what you can. If you can't pay all your credit cards off, pay what you can right now and then keep going at that, keep working at it. Don't feel so much pressure that you have to clean it up instantly because that's not reality most of the time. Sometimes if you find yourself having to start all over, or if you have just never borrowed before and you find yourself in a position where you have to just establish credit, not just reestablish, but really start it from the beginning. And a lot of you that are on this call maybe have kids that are getting ready to establish their credit. This is important for them too. Start off with a small credit builder loan, okay? We have a loan here called our shared secured loan. And how that loan works is you, or if you want to get your kids' credit established, would come in, the minimum amount is $500. So you would deposit that $500 into the credit union, okay? We would put that money on hold. What we would do though is give you a $500 loan. So you're still walking out of the credit union with $500. You can do with that money whatever you want. We keep your $500 on hold in the account just in case you don't pay that money back to us, okay? We have a way to recoup our money. So it's kind of a trust both ways system. You're getting a $500 loan. We have some money on collateral on hold for you as well. And you pay that loan back in 6 months if it's $500, okay? And at the end of that 6 months, that initial $500 that you deposited is freed back up to you. So you're barely spending any money in interest. The interest rates are great on this loan. So you're spending under $100 in interest. And what that does for you is it gets some positive credit history established, all right? And then like I talked about before, we make a plan. We don't just end at that, because if you don't take another loan out after that, your credit score is going to go back down to 0 if you don't have any credit. Okay. We take that next step. What is the next thing that we can do for you? Can we give you a personal loan? Can we give you a credit card? That's how you get the ball rolling in either establishing credit from 0 or reestablishing yourself after you've run into some trouble. So again, come in and talk to us. We can let you know what the best product is to get you reestablished. But a lot of times you got to start off small, take that baby step, and then build your way up from there. As we discussed in a couple of the examples that we looked at today, you're going to pay more money if your credit score does not improve. If you find yourself with the lower credit score and you going out there to borrow money, which a lot of us have to, either we lease or buy cars, most of us. A lot of us don't have the financial freedom just to go buy a car cash. So we're going to have to get a loan from somebody, and your credit score dictates what your interest rate is going to be on that loan. And as we saw in that example of the car, you can spend tens of thousands of dollars more than you need to if you have a lower credit score. So this is so important. You are going to pay more until your credit score improves. It's just a proven fact. And that's why we're here to try to help you increase your credit score, because we don't want you to pay more, especially in times like this when everything's more expensive for us. Every single dollar and cent that you can save matters. So that's why you need to make sure that your credit score stays as high as possible. A lot of us, myself included, through the years, have made some mistakes with our credit. Either we've gotten ourselves in too deep and couldn't get ourselves out, or maybe we were a little lackadaisical with our payments. Maybe we charged our credit cards too high because we wanted to go on a shopping spree. Whatever mistake you made, just learn from it and try not to repeat it. That's the best way to not repeat things, is to learn from your mistakes. See what happened in the past. Say, when you find yourself in a similar situation, you can say, okay, what did I do last time? I got myself in trouble. I wonder what I can do this time. And if you don't have the answer, that's when you come in and talk to us and maybe get some advice on how you can proceed and try to not make those mistakes again. Okay. All right. So what questions do we have, Jeff? Is there anybody who posed any questions in the chat?
Yeah, Brock, thank you. Great job. Given a lot of great information regarding the importance of developing and maintaining a strong credit score. And we do have some questions from the ladies and gentlemen that have attended with us today. First one is, well, this person went ahead and said, I have a lot of credit card debt and I have an okay job. But how do you determine how much I could get on a debt consolidation loan?
That's a good question. Everybody's situation with the debt consolidation loan is different. Everybody has their own unique set of circumstances that they're in when it comes to debt consolidation loans. You had mentioned, or the member had mentioned, they have a good job. That's one of the things we look at, one of many things that we look at. So my initial reaction to a question like that is just come in and talk to us. Everybody's situation is unique. We can look at your situation and give you the best advice. As far as debt consolidation loans go, sometimes we can't do all of the debt. But again, we talked about in the session today, making a plan. Sometimes you have to take a step or two before you get to your final destination. Come talk to us and we can let you know what that is. And if we can't buy out everything and make you have one payment, maybe we can knock some of it out in the initial loan and then set a game plan where we talk in another 6 months, in another year, and then try to knock the rest out. That's what we do for some of our members. Some of them we can do all of that, but in other instances, we try to take it a piece at a time until we get you to where you need to be.
All right, very good. Next question I've got here is, what are some suggestions you have to avoid using my credit cards too much, especially after I've paid them off or paid them down?
Well, that's $1 million question, is how to not use your cards. One thing that I always try to do in my life, and one thing that I always try to tell our members is to make a budget every month, right? So we all should know roughly around how much money we make on a monthly basis. After your taxes get taken out, after whatever comes out of your check is there, you have a net amount at the end of the month. I always try to look at what my bills are, how much am I paying for everything, and that goes from everything big like a mortgage or a rent payment to your car payment. You can go all the way down to some subscriptions you have. How much is Netflix? How much is Amazon Prime? Take all of those things out of your budget and see how much money you have at the end of that. That's how much money you shouldn't spend over your credit cards, if possible. Now, that's easier said than done sometimes, right? Life happens. Maybe you blow a tire on the freeway. Lord knows we have a lot of construction right now, right? Almost every freeway has some construction. And it seems like on a monthly basis, I'm seeing either my car get hit with rocks, I'm seeing construction cones get nailed by cars. Stuff happens, and you might need to do some car repairs. You might need to get a new furnace. Things happen in life where you need to go spend money, right? But if that's not the case, you don't want to spend more than you have left over at the end of the month for your budget. And if you do have a big expense that's going to come up, whether it's car repairs or a furnace, that's when you want to come in and talk to us and maybe not charge that on your credit card and just get like an installment loan for that. One thing that we didn't talk about today is installment loans, because we are focusing on the revolving debt. But if you come in and get a personal loan, an installment loan is one of those loans where there's a fixed term on it. So you take out, let's say, $5,000 and you take it out for a 2-year term. After that 2 years is done and you make those monthly payments, that loan is gone. It's not revolving. That one's done and over with. Those types of loans don't affect your credit score. They don't affect your credit capacity, I should say. They do affect your credit score, but they don't affect your credit capacity. So if you take a loan like that out instead of using your credit cards, you can probably help your credit score. But again, everything comes down to you and your situation individually. Everybody's situation is different. If you have some questions on what you should do or how much you should spend on your credit cards, come in and talk to us. One of our representatives would be happy to sit down with you, go over your monthly budget, kind of let you know where you stand, and then you can get a better idea of how much you should be able to go out and spend on your credit cards.
Yeah, and just to piggyback on that, ladies and gentlemen, we've got a long-term relationship with GreenPath, and GreenPath is an organization that has helped individuals budget their finances for many, many years, and they do an excellent job of it. So we'd be happy to refer any of you that wish to have that kind of discussion with an organization like that and get the ball rolling in the spirit of trying to help you save as much money as you can. And if you do end up doing debt consolidation loans with us, I'll help you figure out a way to afford those and not build your credit card debt back up. All right, next question. How long after a credit card is opened is it okay to ask for a limit increase?
The answer to that is that it's immediately it's okay to ask for an increase. Again, it depends on the situation. Sometimes when you ask for a credit card initially, like if you apply for a credit card, you really don't know how much to ask for. So you might think to yourself, well, I'm just going to go ask for $1,000, right? Now, some companies are just going to give you what you ask for. Here at Michigan First, we tend to give you what we think is sufficient for you. So if I had a member who came in and asked for $1,000, but I thought that they could handle more than that, I would tell them, yeah, I will approve you for your 1,000, but if you wanted 5,000, we'd approve that too, and let the member make the decision. A lot of companies out there, I don't want to besmirch them too much, like Capital One and Credit One and some of these companies that have extremely high interest rates and annual fees on their credit cards. They're just going to give you what you're asking for. They're treating you like a number, not a person. So you could probably ask for more and get more, but they're just going to give you what you ask for. So there's no time limit for this. If you applied for a credit card last month, you could call right now and see if you can get an increase. So there is no time limit to that.
All right, here's an interesting one, Brock. We've got a listener asking about whether or not it's best with an installment loan, like an unsecured loan or an auto loan, to pay it off early or continue to pay it until the contract is over. What are your thoughts on that?
Well, I think there's a lot of things at play. That's a loaded question. Because if you have the financial freedom to pay that loan off and it's not going to hurt you financially, like you're not going to deplete your savings, you would certainly save yourself a lot of money in the long run by not having to pay interest anymore. But you know, if you need that savings, like if you have a nest egg there that you don't want to use, then I would say don't use that and don't pay it off because you don't want to find yourself in a situation. You can't put the money back once you pay a loan off. The loan's over. You can't just go back and switch it around. So that's final when you do that. But if you are in a place where you can pay off your debt, that's the best thing to do. You also want to be careful if you pay off loans that you still have some credit out there, because if all you have is are installment loans and you pay all those off within 6 months, if you don't open up any credit, your credit score is going to disappear. It's going to go down to 0, and then you have to start all over. So just be careful of that. That's why it's important to have a diverse credit profile, not just having installment loans, but having credit cards that are open. That way, if you do end up paying off your installment loans, you still have credit. You can still maintain your credit score. But if it's not going to hurt you in the long run, if you're not going to deplete your savings in a bad way, I would advise to pay your loans off faster if you can, because you're going to save yourself money in the long run. But that's a tough question because there's several answers to the same question depending on what your personal situation is.
Yeah.
So if you want to have that discussion for you individually, I would advise, calling in or coming in and talk to us about it.
Yeah, I would agree. It all depends on your financial wherewithal. If you have the ability to get yourself out of debt, you should, because it's going to save you money in the long run. But if you've got challenged credit and you really can't, paying through the contract will help you. Going back to asking for increases on credit cards, there's a question here that says, does asking for an increase affect your inquiries or score?
Yes, more than likely, if you ask for an increase, you're probably going to have to put an application in for that. And if you put an application in for that, you're going to get a hard pull on your credit. And a hard pull on your credit can affect your score 3 to 5 points for that hard hit. But that is a small price to pay for potentially increasing your credit capacity significantly. If you lost 3 points because you got a hard pull, but you gained 50 points in your credit capacity and your score went up, it's really worth it. And having a hard pull on your credit score, as long as you're not having your credit run all the time, really isn't that big of a deal, because you're going to make up for that anyways. The further you get away from that credit pull, your score is just going to bounce right back up anyways. There has been a lot of things out there that have made people definitely afraid to get their credit pulled. And I think the misnomer out there is that it really tanks your credit score, and it really doesn't. Unless you're going credit crazy and opening up several loans at one time, your score is not going to be impacted too much by having a hard pull. So if the action that you're taking is going to be worth it, I wouldn't worry about that too much.
All right, very good. It appears that we've gotten through the majority of the questions. There are a few lingering out there, ladies and gentlemen, that have come directly to Mr. Baker and I, and we will continue to reply directly to you until or before we end this session. So sit tight and we'll get to those as quickly as we can. In addition to that, if you do have additional questions or are interested in discussing your individual credit situation with one of our credit professionals, you can visit one of our 30 branch locations now across the state. You can call us at 800-664-3828 or visit us online at michiganfirst.com. At this point, on behalf of our nearly 500 team members, I want to thank you all for participating and for supporting Michigan First Credit Union. That's all for now. So until next time, enjoy the rest of 2023.